If you've ever looked at a chart and you've been like, what the hell am I even looking at? Then this video is for you. We're going back to the basics. This is episode 1 of Going Back to the Basics, and we're starting out with support and resistance. Hope you enjoy, and also I hope you learned something. Cool. So let's get right into it. Basically, what support and resistance is if you think of yourself in a hallway with a bouncy ball. You grab this bouncy ball and you throw it at the ground. When you throw it at the ground, it'll go touch the ceiling, likely come back to the floor, likely touch the ceiling again, and then might tap the walls on the hallway. In a nutshell, that's basically support and resistance, right? So one thing I just want to make very clear is that the market has a memory, and so do people. And so you have to take into account when we go and peak at what was once all time highs, we're likely going to get a reaction off of that, correct? Now, this reaction will then serve us later down the line. So you want to always start on your weekly. You will always want to go from a higher time frame all the way down to a lower time frame. Why do you want to do this? Because on the higher time frames, you have a lot more data to base your trade hypothesis on, right? And from there, you're able to make more informed and educated decisions that allow you to be able to have confidence in the trade that you're taking and the reason why you're taking that trade. If you're in a trade and you have no reason as to why you're taking that trade, you likely should not be in that trade. So having these points of confirmation along with everything else you might apply and learn is relatively important. So starting off on the weekly with a stock from the stock market called IONQ. Now, if you know anything about IONQ, they do a lot of data and supercomputer stuff. They are like quantum computers are going to be, I think, one of the biggest phases next to AI, obviously. And I think AI will assist this company in a ton of different ways, right? With that being said, you don't always have to know a lot about a company. The chart usually knows before the news, and that's just typically how things work, right? Regardless, whenever you're trading futures, futures is headline driven. So again, the chart always knows before the news. So marking out these points of support and resistance, specifically and especially when you're not at all-time highs, really helps. So again, we're starting off on our weekly right here at 55.18. You could see if we just take a simple line and we throw it on, that you are able to see that at one point this was our all-time high. We rejected off of it, and then when we came back to it, we ended up opening above it, breaking through it very heavily, and then going to all-time highs again. Whenever we get to all-time highs and we have a big rejection, we always want to place another line, or what this would be considered is a point of resistance, right? So we have resistance, resistance, and what do we want resistance to always turn into? We want it to turn into support. So again, when the ball hits the ceiling, it's not going through the floor, right? The floor in the hallway would be our basis of support. We have a strong foundation in order for us to be able to bounce off of. So that's basically what support and resistance is. So here you could see that we tapped here, we rejected. When we came back above, we broke above heavy, hit all-time highs again, and then we came back down. And this specific candle right here, you see that we have a wick and we close back above our previous point of resistance. So you can assume that in this time, we're likely going to have price action trend to the upside, and which we did, right? So 55.64 to $66. I mean, from here, from that move from down there to here is relatively big, right? And again, if you're trading futures, it's the same type of concept. So from there, because we ended up rejecting there, we can place another line, and we could see that if we look left, this was also a point of support that then turned resistance. So you say, cool. So what happens when we break these levels? Well, then we just simply go back down to other areas of support, right? Whoops. Other areas of support. And then if you want to, after this, when you want to go down to lower time frames to check your support and resistance lines and possibly to find more, then you can also totally do that, right? So if we were to take another line and we were to place it at a point where we bounced, then, and I guess also at a point that was once all-time highs. When I say at a point that was once all-time highs, it does not always have to be that way. As you can see, below here, we actually have strong points of support strictly based off of, previous data of us going and previous price action of us going to the downside. So it doesn't always have to be at all-time highs, but I'm going to continuously say at all-time highs as we continue to push into all-time highs in today's market, right? But with all of that said, you want to see these levels specifically hold. So at a point that was once all-time highs, retest, open above, break down through, and then we come back to it and we reject, we break above. Now we want to see this level hold. So here, and like this goes back again to that bouncy ball example, when you bounce that ball and it touches the floor and the ceiling, it might hit the walls of the hallway, right? So this would be considered the walls of the hallway, where you get a period of consolidation where price action is moving not too heavily up or down, right? We get a $5 move within from November, what is this, November 21st 2025 to December 8th, right? So within a week, we end up seeing some relatively actually healthy price action. Nonetheless, usually during periods of consolidation, we won't see big moves within the market, right? That's just typically what happens. We trade within a range. Once we break out of that range, we have a lot more confirmation. So given that we continue to reject up here at a point that was once all-time highs and also support, we end up making a move to the downside. And we end up bouncing in an area where, we put this here, we end up bouncing to an area that shows us that there was support here, right? As once a previous point of resistance, now we have a new form of support. So that's basically what support and resistance is in a nutshell. But there's three specific rules that I follow, right? And one of them is to connect the swings. So whenever you see swing highs and whenever you see swing lows, you want to be able to connect these to something based off of previous data. So here we can connect this 48.58 to over here, right? And over here, and over here, and over here, and right here. Like we can continue to find areas that are very important to the well-being of the security, whether it's going up or whether it's going down. And another rule is, don't be precise, be approximate. You have to give yourself some leeway. You're going to get a lot of crazy days, a lot of crazy weeks. We've been green 5 weeks in a row on IONQ. So, be approximate. And when you see these levels come into play, then just have a plan on how to play them. I mean, it's kind of that simple, right? And then rule 3 is that the obvious ones are always the strongest. So what I mean by that is whenever you have a ton of rejections at a point that was once support, we're likely going to go down. Whenever we have a lot of buying in an area where, was once previous resistance, that we're likely going to trend up. So you just have to keep all of these things in mind when you are trading these in real time, right? So from the daily, you then move to your 4-hour, possibly find new levels, possibly find new areas of consolidation, and then you would move down to your 1-hour, do the same thing, and then 30-minute, 15-minute, 5-minute, 3-minute, and 1-minute. You can trade off of all of those, right? So if we go to hour 15, we can see that we are likely going to go to this 84.77. That's likely what's going to happen. And if you wanted to even get more precise and you're like, okay, well, we might hit some resistance on the way up, Absolutely. We definitely will hit resistance on the way up. So from there, all you have to do again is go to a lower time frame and see where there was once an area of resistance and then support and maybe again some consolidation and a big area of confluence that influences price action. So, when you do that, you're able to give yourself a little bit more bias and confirmation as to where the security might head next. And when you do that, you're able to take a trade more confidently. If you don't know why you're taking a trade, then you likely should not be in that trade, right? And if you have a multitude of points of confirmation, then from there, you're going to be able to actually, have more confidence in your trade, maybe hold longer. And yeah, that's basically support and resistance in a nutshell. I hope you learned something and I hope this helped. So go out, trade smart, protect your capital. Even sometimes a loss is good. Humble yourself a little bit. The market is hard, especially right now. So if you have any comments, questions, concerns, feel free to comment down below. Hope you enjoyed, and I hope you learned something.